What is up, YouTube? Welcome back to Stocks by the Numbers, and I wanted to go over a potential quick trade here that we have setting up in Wayfair, ticker symbol W, listed here on the New York Stock Exchange. There's a company, retail, online, nonsense, $7.88 billion company, losing 12 3/4 per share. Seeing here, price target recently raised. In my opinion, I really don't know why. It looks like the EPS estimates and reports have been climbing a little bit, but if we switch over here quarterly, we can just see inconsistencies in the revenue here. Going back to Q1 of 22, you can see about $3 billion up to north of 3.25, back down to 284, up to 3.1, down to 277, right? So it's like we're slowly stepping down lower and lower, and of course the margins have been dropping as well, along with every other company. And we switch over here, we look at annually, and you can see we had a big run up here going into 2020, about 14.15 billion here for the year. And then we move forward since then, when most companies have been actually doing better coming out of 2020. This company has somehow been doing worse. So they went from a profit margin of 1.3% on that 14 plus billion down to 13.7 billion, minus 1%. Now down to 12.2 billion for the year of 2022, profit margin minus 10.89%. So you really don't have to be a rocket scientist to see what's going on. I can appreciate the fact that they feel it may be undervalued in the numbers, which is why we recently received some price target increases. However, the company rejected multiple times off of this high fib here of about 73.73, and of course off of this trend line that I drew out of roughly 72.78. Now it's funny because, again, this is why I tell you guys to join the Discord if you're looking for some quick day trades or week trades, or even for the following week to position ourselves in, because someone mentioned Wayfair, and we started to look at it, and we saw that it was in this basically long-term rising wedge here since the last time they reported earnings. Good beat there on the top and bottom line. But in this rising wedge, again, as I stated, it was only a matter of time before we broke down. And literally, as we looked at it right around here in the mid to low 60s, it broke out of the wedge. And I don't recall how much it went down that day, but obviously it was a huge winner, as you see here, dropped down to about the mid 56s. Now, since bouncing off that level, has climbed all the way beeline straight back up to that trend line and rejected and pulled back to retest this fib here at 68.42. And now you have it, again, consistently trying to fight. However, we've made our double top here potentially. Right here, I'll point this out. There's one, and there's two. Right? So we have potential double top. So then we begin to drop. Then we broke that resistance level that they tried to make new support. We broke down, and then you see we broke straight through the 20-day simple moving average and have since been basically trending lower, minus this pop back up here to this fib. But overall, basically trending lower. Now, you can see basically what levels you need to look for based on how the stock has previously traded, right? Now you can see, again, we ran it up and we pulled it back here to this fib of 68.42, right? So obviously, in my opinion, that's going to be the next stop, is going to be 68.42, and then you come back over here and you can see right here at this level on the run up, this is where the stock began to consolidate and run into a little bit of resistance. So that's a key level right there at 65, 64, around that level, right? And the same thing happened here, which incidentally is about the high right here. So right here about is going to be like another level also. You're looking at about $61.90, $62, right around that level. And here you can say also is another key level as well. If we just go across right there, boom, that's a key level right there, right? So again, I understand a lot of people may not have the same knowledge and expertise as I have, as I can bring to the table. However, all you need to do is just take your time, and believe me when I tell you, you may potentially know more and see more than you're currently giving yourself credit for. Right? So just keep that in mind. But in my opinion, I do have a feeling that we are going to slowly chunk back down to these levels here. Now, easily, again, first of all, if you get inputs today and it breaks this 70-20 fib level, And even if it drops down here to 68.42 in the next day or two, chances are, obviously, your put's going to be up and you could potentially make a quick profit. But of course, if it does continue to break down and it drops here to that 65, 64 level, well, then you're probably going to be sitting pretty and you're going to be making some nice returns there. But overall, again, in my opinion, it seems like the company has been trending downward. Again, the market cap only $788 billion. Last year, they brought in north of $12 billion. So again, could be technically viewed as undervalued in the numbers. So I appreciate where they're coming from here with this random price target raise here. But even a company like Goldman Sachs, look at this, raised their price target from 35 to 55, just because they were off a little bit. But more importantly, 55. I mean, that is significantly higher than where we're trading at right now. So that's why I always say if you can buy time on your options, then basically you should essentially always be right because you're buying that time. And eventually, even if it goes up before it goes down, obviously if you want to add to the position to lower your cost basis, that's entirely your own prerogative. But eventually it will begin to pull back and you will, of course, be in profits. I mean, if you were able to buy right now, 5-6 months out, if you were able to buy like 55s, obviously if it begins to pull back and start testing these levels that we just laid out, you're going to make fast, easy, quick, stress-free money, which is why I always say if you are going to do options, try to buy as much time as possible, unless, of course, we're talking about a scalp, right? If we're seeing a reversal in the NASDAQ, you want to jump in QQQ calls, and, in 30 or 40 minutes, you just saw a chunk up of like 40 or 50%, whatever it is. Obviously, those are different. These are different types of trades. These are considered scalp trades where you want to be in, you want to be out. So if you want to buy that Friday expiration, totally understandable. Situation like this, you're going to want to give yourself some time. Again, because as we're seeing here, the stock was at the fib of 70.20 when we started, and you can see it's trying to bounce off the fib, and now it's sitting at 70.5, right? So they may try to retest it back up here before they bring it down. However, again, we had multiple breaks here on this trend line, and we're sitting, fighting, looks like, in my opinion, to go lower and resist off of this 20-day moving average, especially since it just broke and just went on an absolute tear here just in the last week or two. So, like we say, what goes up must come down, and in my opinion, I do think that this is going to go lower here down to these trend line levels. But, again, this is why you buy time. Just to reiterate again for like the 5th time, this is why you buy time, because if they bring it up before you go down, it's not going to matter because in the end, you're going to be right. Obviously, your price entry could have been a little bit better, and if you want to blame me for that, that's fine. I'll take it on the chin. It's no problem because like I always say, I'd rather be early than incorrect. And, when I have high conviction on these situations, that is when I try to make a video and try to give you guys my slant on the situation. So, again, this was the play as soon as we looked at it here. Those puts were basically a layup. In my opinion, I just knew it was going to happen. And then it broke out and kind of started forming another rising wedge right next to this rising wedge. And, then we had the break again, retested the fib. But now, again, we look like we double topped here, 73.73, 73.73, right there. Top, and then we started pulling back. So I know sometimes it's hard to try to see some of these patterns and try to predict what a stock is going to do or what the market is going to do, but just keep this in mind as well. A very good trader or investor, you don't necessarily try to predict what's going to happen. You kind of try to react to what's going to happen, right? So if it was in this rising wedge, right, as we've seen, we see companies like break down out of the wedge like they're supposed to, and then they chunk them back up and they bring them like right back into the range, and it just keeps going, right? So that's why, again, if you position yourself here and it happens to break, you have to know to get out, to flip it, and to get back into the calls because they're probably going to ride it back up to where it was. I understand it's very confusing, it's complicated, could even be considered overwhelming at times. But again, this is where the time and the experience comes into play. Again, I was in the finance industry. I've been trading for several years, analyzing stocks. Even when I didn't have money, I would look at stocks. I would make calls for other people. Oh, you should buy this. You should stay away from this. And again, like I say, even on the low end, 70-80% of the time, I would be right. And obviously, when you're rolling on all cylinders, you're doing 90+ success rate. But again, it will come to you in time, but these certain things, you have to start to see where to draw your trend lines. Keep an eye out for these double tops, these double bottoms, these reversals. Look for the small wedges on, the 1 minute, the 3 minute time frames up here, and then try to catch the drops and catch the pops. It really is a trader's market, and you have to be in and out. Now, of course, again, we do have other investments that we went over on this channel that are setting up more in long-term patterns, showing us long-term growth, right? Like our UAAs and the POW that I brought to the table, right? That's in like a longer channel, a longer trend. We're potentially going to run up into earnings. We can, ride that wave and make some profits. It's a very, very different mentality. And it's very hard to put in words, believe it or not. So, again, I'll try to lead you in the direction as best as I can. But for the most part, you're going to want to be in and out. But again, on a situation here like a Wayfair, based on what I'm seeing, you're going to want to buy time with this one. So today is Thursday the 20th, right? So obviously you should not buy any calls or puts for tomorrow, expiring tomorrow, unless you have very, very high conviction in the situation. But on the flip side, even next Friday may potentially be cutting it too close because, again, what if they decide to bounce it off this moving average and bring it up before it goes down, right? So they can bring it up and they can start to have it reverse and go down, and that might not all take place until this time next week, right? So if you bought it for next Friday, you're basically diamond handsing it all the way till expiration, just hoping that the break comes on expiration day to try to get you out for a small loss or even potentially a small gain. Where on the flip side, if you were able to buy a couple of weeks or a month or two out, obviously, even if it goes up in the next week, it will more than likely reject and begin to go lower at some point. So you will eventually make money on the situation, right? And that's why calls and puts with more time on them are more expensive, because now you're paying essentially almost, again, nothing is guaranteed, but you're paying essentially for a guarantee, right? And if you go and you look at a company like a Microsoft, and wherever it is, and you say, it should run up another 5% in the next 3 or 4 months. Well, let me tell you something. You're looking for a small amount of appreciation on a company that basically consistently appreciates for decades, and that's what I'm saying. It's basically a layup. It's basically a slam dunk. So if you're looking for just a small move over a longer period of time, yes, you are going to pay handsomely in the premiums for that situation. Which is why, of course, a situation like 75 calls expiring tomorrow on Wayfair are probably pennies on the dollar. And on the flip side as well, potentially on the put side. So that's why it is a pain in the ass, especially when you cough up the money for time and then it begins to move in the opposite direction right away. Believe me, I understand your pain. However, again, you need to not be emotional. You need to stay focused. Remember any convictions we had. Remember why we took the trade, what we saw, where we feel it's going. And that's why I always say time is king and time trumps strike price. But I'm still looking at Soundhound over here. So now we're going to switch over to Wayfair. And here, looking at the weekly, see what I see here? We have the RSI basically approaching 70 here. It's sitting at 68 on the weekly. The MACD has been climbing like crazy for about the last 12 months, even though the stock itself, in the revenues, in the numbers, has not really been performing. Quick point here. a high of 74.25. Yeah, and we hit about 73.75. So that's why I'm saying potentially they could have like that fake pop above that trend line again to 74.25 to form a double top here, and then to justify it to bring it back down even more. But again, they really tested it there on that top trend line, and it looks like it didn't want to get up there. So in my opinion, it will most likely go down before it does go up. But on the weekly, again, the rising MACD, we're out above the top Bollinger Band. In my opinion, we should pull back. 43.65 may be a big drop. And again, the mid-Bollinger Band is only 44.71. So that's why I don't know if we're going to chunk back down to the middle of that range on the weekly. But, you know, we could see a quick 5, 7, 8 point drop, which, of course, is going to translate well into profits on the put. We switch over here, and you can see this whole way up. Look at the RSI absolutely raging, right? Then we drop back down to this mid-Bollinger Band, and we tried to climb back up, but as soon as RSI got above 70, they began to pull it down and reject it off of that trend line and start to sell it off. So that's why I'm saying even here, again, a pullback to the mid-Bollinger Band, 65.37, 65.64, right? So that's what I'm saying. So you can easily see that if you jump in puts here on a situation like Wayfair, dropping down to 65.5 definitely is doable, definitely is feasible. The good news is if you wanted to go long on Wayfair, if you think I'm wrong here, the good news is you can see on this pop-up, again, you have the widening of the Bollinger Bands, right? Because they open up, they kind of trumpet open when a stock either pops or drops. And then it begins to readjust itself. And as you can see on this slow incremental climbs here up basically since June, you can see that now the bottom Bollinger Band is rising up, and now you're having that tightening begin to take place here. So that's why I'm saying if it kind of begins to drop down, like the MACD will kind of like flatten out maybe here like sub 60, and then they'll rise it again and it'll start to climb, right? So down the road, like a month or two, we can recheck this, and we may have, like, see this top Bollinger Band to the mid, this may be the bottom, and it may look this tight here within the Bollinger Bands. And then if we're looking at a potential bullish breakout, obviously we can reanalyze the situation, because like I said, they technically are undervalued in the numbers. So if they are someday eventually able to turn it around and all of a sudden revenue starts growing again, they're going to fly this up back to where it was several years ago or whatever. It's probably going to get back over $100. But again, that's only time is going to tell, and of course that's going to be dictated more in the numbers. But here on the daily, you can also see, look at that MACD. It looks like it just crossed to the downside. Here, let me take this off. You see that MACD right there? It looks like it just kind of crossed to the downside there. So that's why I'm saying we do have to watch these key fib levels, and you want to see it close below this 20-day moving average to kind of confirm that we're in this downtrend now. But in my opinion, we do have a lot of indicators lining up for us that Wayfair has the ability to go lower before it goes higher. So that is why I made the video, and I just wanted to bring it to everyone's attention, because we may have the ability to, position ourselves for the next investment or trade and make a couple of bucks here together. But again, like I always say, if I see something, if you guys ask me about something, I'll make a video. If I have some sort of level of conviction in it, I'll let everyone know. And again, this is just my opinion. Whatever you do with this information is entirely your own prerogative. But just giving you my opinion on what I feel could happen, and more importantly, how I potentially would play it if I was looking to get involved. But I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop them down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, helps out the algorithm, helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement, right? I will bring you anything I see, something like a Wayfair, something like a UAA that's been doing very well for us. Stock went from 7 to almost 8.5 since I made that video. So if I have something in the longer term, in the shorter term, I'll try to do my best to let you know. And all I ask is handshake agreement. You want to watch the content, you want to trade and invest off of my recommendations, no problem. Just do me a favor though. Push the subscribe button. That is the handshake agreement. Nice car going by. That is the handshake agreement, and that is how you help me help you. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I do want to wish every one of you success. I hope all of you make a couple of dollars. Thank you for stopping by. I'm going to catch you guys in the next video.